Hello, Andy Tanner here. Please allow me to extend to you my warmest welcome and also a congratulations for your enrollment in courses here at the Cashflow Academy. You'll find very quickly as you dive into your courses that each instructor, myself included, we're very passionate and we take financial education very, very seriously. You'll discover very quickly that we have a value and a priority on three important words that I'll share with you now. The first one is fun. The second one is the word simple. We'll write that down. And the third one is a very important word called real or reality. Fun is important because when I was in school, I know that in high school and college, the teachers that made the material enjoyable, they had the greatest impact in my life, and they were the subjects I tended to stick with and really get the most from. Simple is an important word. I wouldn't say anything in life that is worthwhile comes easy. That hasn't been my experience. But if you can find a teacher that can take something complex and break it down and simplify it, that'll be a big deal. Here you see our 4 pillars of investing, and one of the things that makes this simple is once a person understands these 4 pillars, all of these classes make more sense. How to evaluate a company, how to read a chart, different ideas for generating cash flow, and boy, the most important pillar that is always present is managing that ever-present risk. That is the most important one. And so we'll simplify all of these things and make them easy to understand, if not easy to implement. And then finally is the idea of reality. It's fatiguing to get information that is fluff and things that don't matter. So everything we'll be sharing with you will be from real world experience and real stocks. And because of that, there's a lot of risk there. And so before we begin and before we jump in, we're appreciative that you're willing to watch a little introductory video that will help set proper expectations and really help you get the most out of your training. I'm going to cover 5 things here: accurate expectations, the temperament that's important to an investor. We're going to go through a disclaimer that's critical and improve your clarity on this risk management pillar before we get going. And just really comment on, enjoy this process, enjoy doing the work. Now, I chose an icon here with a little life preserver on it for a reason. If you and I were to take a journey up into the mountains or the jungle on safari, or if we were to fly in an airplane or take a cruise ship, I wouldn't feel good about leading you in any of those places without a little safety talk first. I know that when I board an airplane, they say, hey, here's a little safety talk. I know when I've gone on cruises before, we've gone to a muster station and practiced because of risk involved. Well, I will tell you that certainly while we're not going to risk our life investing in any way, we are going to be risking our money. And so a little safety talk with clarity as we begin before we do any techniques, boy, that just makes me feel good as your teacher, and I think it makes you feel good as a student. So we walk into everything with our eyes wide open and have a great temperament and attitude right from the get-go. So let's hop into these things. First, let's talk a little about expectations. I love Stephen Hawking, the late Stephen Hawking, and people say, here was a guy who might have had a pretty rough life and had great success. And they said, how do you feel about your success? He goes, well, my expectations were 0 at 20. They were reduced to 0 when I was 21. So everything else has been a bonus. And, I think a person who expects nothing probably has their head in the clouds. Of course, we have expectations, but if we're realistic about them, we're going to have a great experience. If we're unrealistic about them, boy, you're almost guaranteed disappointment, in my opinion. So we'll keep the expectations realistic about what these courses should do, what they shouldn't do right from the get-go. And that leads to investor temperament. One of the great books that I recommend to everyone is Benjamin Graham's Intelligent Investor. And as you read that book, a person might dive into that book expecting, I want to make intelligent decisions. I'm going to get a recipe of how to buy stocks here. But what you really get is a lesson on temperament. And that intelligent investing could be a good quiz question here would be, would it include gathering intel, intelligence? Yes. Would it involve having a good temperament and making decisions that are not rash or emotional? Yes, absolutely. Would it involve education and analyzing things but yes, all of those things would be present to an intelligent investor. And one of my mentors, Robert Kiyosaki, said this. He said, emotions are what make us human and make us real. The word emotion stands for energy in motion. Be truthful about your emotions and use your mind and emotions in your favor, not against yourself. Now, why would I begin with investor temperament? Well, we can teach charts and we can teach, how to look at earnings and different PE ratios, but how a person feels inside is very important. And quite frankly, I've been disappointed by many of the messages that people often receive that are attached to financial education. As a matter of fact, these three here on the left were not impressive to me, and they're from actual marketing efforts from financial education organizations. We made almost $40,000 in 3 weeks without doing any work. Or our system picked winners 87 weeks in a row, or we make tons of cash without taking any risk. Those are not good expectations, and they would not represent what a person could or should expect. Of course, anything is possible, but I feel personally that those messages are unhealthy as education messages because they prey on a temperament that doesn't really prove to be successful over the long term. Greed and credulity, meaning, believing almost anything just because it sounds exciting. It's just unwise. So up here at the get-go, let's shift over here to the right-hand side. People can set a goal to be a millionaire. That's not a bad goal. It's not a guaranteed goal. But I'll tell you, if a person looks at the power of compound interest and begins to apply that in their life, well, doggone it, they have a lot better chance of having money work for them effectively than if they don't understand compounding. It truly is powerful, and it doesn't need to be extended out into the realm of things that are unrealistic. I'm going to be sharing with you wins and losses, most likely, depending on the courses you're in. And it's important that we said fun, simple, and real. And part of the reality of it is I have lost money many, 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 many times as an investor. I've lost money in business before. I've lost money in stocks before. And part of the education process is knowing how to deal with that. I will say that the more a person learns, the more likely they are to help limit the losses when you have them. Hopefully that resonates with a temperament of investor that's realistic and has realistic expectations. I can't predict how much you'll win or how much you'll lose, but if a person does this on a regular basis, I think it's likely that they'll have both winners and losers. Over here on the left, it says we make tons of cash without taking any risk. Well, that hasn't been my experience. I feel that, we'll be talking about risk involved in every investment. That's one of our pillars is risk management. One of the things I will demand of all students, though, is that they learn in what's called a paper trade or a simulated account. If a person was going to be a pilot, the flight simulator makes a lot of sense before they get in the real plane. So all of the investing, 100% of the investing and practice that we do will actually be in a risk-free environment because I demand of my students that they learn with a paper trading account. Now, I can't enforce that. You'll do what you want to do, but we proceed forth with that expectation every single time. The third purpose of this video is to talk about this disclaimer, and whenever I've taught live and shown this, people have been very gracious and they've been very adult about it. They'll say things like, Andy, we get it. Disclaimers protect your company. Tanner Training LLC, doing business as the Cash Flow Academy. We understand we're grown-ups. We know there's risk involved. You can skip all this stuff. Let's just get into the goodies and get into the good stuff. Well, that's nice of them to say, but I'll tell you, if we were to skip over this or gloss over this or turn it into fine print instead of bold text and all those shenanigans, I'll tell you, we really do miss an opportunity to truly protect ourselves and walk into things with our eyes wide open, set great expectations, and use this education in a more effective way. So while you'll see this disclaimer in every class we teach, you'll see it every week in our mentor club, you'll see it all the time, don't allow just its frequency to take away from its importance. And so we're going to take this opportunity right for the get-go, not to gloss over this or make it fine print, but to go through this a paragraph at a time so there's absolutely no question about what it's communicating, and we'll do that to the best of our ability. So The Cash Flow Academy is a DBA, meaning doing business as, and our core company is Tanner Training LLC. And we provide this training in the Cash Flow Academy and any related materials, including any newsletters or blogs or any communications for educational purposes only. And the word only means that there is no other possible purpose or intent with this education. That is the only singular, just only thing. If I say, hey, I only want cheese on my burger, that means that's the only thing I want on my burger. So that's that. We don't provide legal, accounting, or financial advisory services. Those are for people that are licensed to be financial advisors or financial planners or hedge fund managers. And this isn't a solicitation or a recommendation to buy or sell any stocks, options, or other financial instruments or investments. Now, I'm going to go a little further with this and talk a little bit about this. And why would I care enough to spend more time on this rather than just gloss over it and let's get into the goodies? Well, what I know, and the reason this is so important to me professionally and personally, is there is very much a culture of advice. In fact, advice is everywhere. It's all around. There's plenty of people willing to give it, and there's a lot of people wanting to take it. And maybe we can begin with just a small lesson right here with the word be, followed by the word do, followed by the word have. Now, people, they very much have clarity often on what they want to have. I want to have more money. Who doesn't want that, right? And I'd like to be free and have more freedom in my life and maybe a legacy for my children. Those are the things we'd like to have. So it's very, very natural to ask this question. Well, what should I do? And that's a question that people ask. What should I do? And that's advice. And people very much want to have things, so they very much want to know what to do. But I will tell you, it's been my experience in personal development and as a student that being able to do things has a lot to do with what I become. And that's where be, do, have. Be something before you do something. A doctor, he's got education. A doctor, a good one, will have a great temperament, right? A good one will have, amount of discipline in her life or his life. And so, just because I own a scalpel and I do surgery doesn't necessarily mean I become a great doctor. It has education to all kinds of different things. And so personal development has a lot to do with what we do, and then we can learn to have things. But over here on advice, that's really where advice comes. What should I do? What should I do? And I will tell you that, if I go to my cardiac surgeon and I say, what should I do about my heart? Well, I haven't been qualified to handle this yet. So education will be key. And besides, if I say, well, you should buy gold, that would be advice. Or if I say, oh, you shouldn't buy gold, well, that would also be advice. But if that's all I were to offer someone, yeah, go buy gold or don't buy gold, well, the person has not really learned anything about gold or investing for that matter. So let's have a little lesson on gold for an example. Do this very quickly. I might say, well, you should buy gold. That's advice. However, if I say gold is fungible, well, now that's education. Well, gold's fungible. It's interchangeable. Gold is basically gold. You can swap them out. This bar for this bar, it's going to be about the same. Basketball players are not interchangeable. This is me about 100 pounds ago. And, if someone wants a basketball player and they pay for LeBron James, you can't just swap out Andy and make him happy. I guarantee you. So, these people are not fungible, but gold is very fungible and interchangeable. See, now we've learned something about gold in a fun way, hopefully. Let's look at Kraft Heinz. This is a stock we often use as an example because it's a Warren Buffett company. And, Warren Buffett, he might see this stock as just a machine, right? Let's just draw a machine right here with a little crank on it. And this machine cranks out a dividend for him of about $300 million a year. That's quite a machine. And what's interesting, though, that's called a dividend. As a matter of fact, when you look at all the income that Kraft Heinz earns, 57% of it goes out to dividends. Now that's a Heinz 57 right there for sure, right? That's a better kind of Heinz 57. That's right. All that earnings they bring in after they paid their expenses, they've got all that extra money left over. They take 57% of that money and they give it to their shareholders. And so it's really a machine that just cranks out money. Well, guess what? Maybe that's why Warren Buffett has hung on to it, because it's down over 50% now from where he bought it. I mean, it's really gone down. So if he were to sell his machine, he'd get 50% as much as he bought from it. But you know what? Maybe he doesn't care because it's producing cash flow. So the lesson is that individual assets, they can potentially impact your financial statement in very different ways. Well, guess what? Gold does not affect cash flow. I have some gold, actually, I'm looking at sitting here right on my desk. I've got a little gold bullion, and I can wait for it. It doesn't produce any new cash. It's not like a machine. Now, it goes up and down in value just like Heinz does. And so if I buy gold, I want to go in there with my eyes wide open saying, well, maybe my goals here are speculation that it might go up or a fear that it might go down, but it's certainly not going to do this for me. Like maybe a stock would. That doesn't mean gold is good or bad, and it doesn't mean I'd recommend stock over gold. It's just that we're learning that gold isn't traditionally a cash flowing asset. Let's learn a little more about gold. Well, if we were to look at its history, we find that it often does something called non-correlation, or really inverse correlation. Here I can see the US dollar goes up, and I can see that, boy, it looks like the gold tends to trend down. Not all the time, not perfectly. When the gold is trending up, that seems to help out to offset the dollar going down. And we can draw, these little correlations to help make them simple, and they're not perfect by any means. But a guy knowing this history, they might feel a greater degree of comfort, saying, "Hey, you know what? I might not get any cash out of the gold, but it seems to rise if my dollar's losing money. Maybe I get a little gold raising money, maybe." But here's the greatest lesson I can give you. What does the future hold for this? Is this going to continue? I have no idea. There are no guarantees, and that's some of the best education I can give. So what this helps me understand, that there's no guarantees, it helps me manage what? My expectations. You know what? I might be concerned about the dollar losing some value, and I might say, you know what? I think I'm going to speculate and buy some gold. But if it doesn't happen, well, I shouldn't be too disappointed. Why? I knew there were no guarantees that this would continue in the future, but I did make the decision based on, at least it was informed on some past, and also informed that it wasn't guaranteed in the future. I become maybe a little bit smarter and a little bit more informed by knowing this. So now I can look at this. I say, well, maybe I have a little stock for some cash flow, and maybe I protect myself if it goes down a little bit, or maybe I just want to hedge as gold. I have an income strategy or cash flow strategy. I have a growth strategy. I have preservation. It's really going to be up to you what you want to do. But again, none of these are ever guaranteed, and that's part of the investor mindset, is understanding, look, I'm going to make informed decisions based on what I know about these, but I also walk in it with my eyes wide open. As Buffett doesn't have any guarantee for success just because he's Buffett. He wins and loses all the time. So when we frame advice versus education in that disclaimer, that's really what we mean, is we're not interested in telling you to buy or not buy anything. That's not our job, because then you don't learn anything anyway. What we're here to do is never tell you what to buy or not buy. We'll simply say, well, gold's fungible. Do with that what you will, but it is fungible. Gold's not a cash flowing asset. Do with that what you will, but don't expect to buy some gold and have it crank out extra money every year. It's either going to appreciate or depreciate or stay the same. Those are the three possibilities. Historically, gold's been inversely correlated to the dollar. Now you have some education. Now you know, and that can inform your decision, knowing that it might not be that way in the future, but it was that way in the past. And so now a person doesn't make a guaranteed perfect decision, but they are making a decision knowing just a little bit about that. So let's, 2 or 3 minutes on gold, just to more illustrate the difference between advice and education. So if you're comfortable over here on this side and this is what you like, then the Cashflow Academy is going to be a really enjoyable place for you if you like learning stuff like that. So fun stuff. Next part of the disclaimer. We're going to use examples. Now, I can use theory or I can use real stuff. And if I ask my students which would you prefer, theory or real stuff, they're going to choose real stuff every time. Well, I'm willing to do that as long as people know, hey, that might not be what I'm doing in my own account. So I will use, sometimes I'll use XYZ stock and a widget, but Other times I will say, well, here's Lululemon or Apple Computer, because it makes it more real. Remember, our education is supposed to be fun, simple, and as real as possible. I'm willing to use real stock examples, but we do that with you understanding that these specific examples that address specific assets, stocks or options or transactions, they're for illustrative or illustrative purposes only. And they may not represent specific trades or transactions we have conducted. Some of them will, some of them won't. I do not personally trade a lot of Forex, but I might use a Forex example, things like that. In fact, we might use examples that are different or opposite of transactions we've conducted or positions we hold. Very, very true. A good example is, personally, I've had some options on stocks like GameStop to have a bearish position, where in the Mentor Club, we've actually owned stocks in the same company. So this is for education, not advice. This training is not intended as solicitation for any future relationship, business or otherwise, between the students or participants of the trainer. We don't sell stocks. We don't sell real estate. We don't do that stuff. We're simply have an education relationship, nothing more. So that's important stuff. When I talk about giving examples, we're going to learn later on about enterprise value. We're not going to do it right now, but we'll learn what it is. We'll learn about something called EBITDA. We'll learn about price, earnings ratios, and growth. And we will give you examples of criteria of what we might consider bullish or bearish. This in no way guarantees that a stock will go up or go down. It just simply says, look, this company is a little bit in better financial shape than this company. And that's all it says, nothing more. When it comes to their earnings and growth, this one looks like it's headed in a little bit better direction than this one. But it never guarantees tomorrow. So if I give an example like this one, here's Tencent, and they have ownership, a large ownership in a video game called Fortnite. And if you have kids, you know what that is. It's Fortnite. And here's GameStop, and they also have video games, but these guys, have stuff that's downloadable, and these guys are kind of like the old Blockbuster Video before Netflix was around. And so I look at these balance sheets and this income statement to show people how to read them, not to recommend. Now, obviously, when we're done, we're going to see that these guys are pretty happy with the money that they're making, and these guys are pretty sad with the money they're making. But no way am I saying, well, yeah, go buy this and go short this. That's not what it is. Now, why do I hammer this so much? Well, I know human nature in that be, do, have. People get so greedy and so excited to want to go out and do something that they can easily misconstrue simple examples with advice. So if I give a specific, it just is more real if I give a specific company that is suffering and another company that's doing pretty well and show that, how to read both of those. Well, that's what I mean by illustration only. I don't own any Tencent, and I don't know that you should or should not. Keep it on paper, keep it in practice, and don't confuse examples ever with recommendations. Why? Because the one guarantee I can give you is that there are no guarantees with what either of these companies will do tomorrow. It's just helping me make a more informed decision. Certainly, if I decide to short GameStop, I might feel a little more confident doing that after looking at data as opposed to not looking at data. But I don't have any guarantees that they'll work out. Another important experience with not allowing an example to be construed as a recommendation is one of the things people ask for is things that are very, very real. And so we do this. And this is a very recent picture of what we call the Mentor Club. And many of you might be enrolled in the Mentor Club. And what the Mentor Club does is it applies the four pillars once a week in a trading session with me and some of my teachers and mentors. And recently we had a position in Apple right here in our paper trade account. And I said these words. I says, I look at this chart and I look at these premiums. What I might do right here is do something called writing a covered call on Apple. Well, when I say what I might do here, that is not equivalent to saying, well, this is what you should do. I'm just showing when I see something how I would apply these four pillars. And I'm going to highlight something. I'm losing on this now. Okay, that's a loss right there. And so even if your teacher comes out and says, I think I might do this right here. Well, in this one, it didn't work out for me. And one of the things you'll find in Mentor Club and throughout our training is, there's a loss, there's a loss, there's a loss, there's a loss. That's a big loss right there. There's a big loss here. There's a loss here and a loss here. And I will tell you that a person with the right temperament will probably be more interested in how we're going to deal with these than when we got just flat out lucky on that one right there. Because this one right here, every once in a while, you get a little bit lucky, don't you? I mean, that represents half of what we're up. But we'll talk about letting runners run and cutting losers short and all that type of stuff. But for this video, to walk in with our eyes wide open, make it clear, is just because I do something here doesn't mean it's going to work out. And when I say, hey, what I might do within this situation, I might write a covered call on this. Well, I also know how to manage the risk. I also know how to keep it under control, but I wasn't guaranteed to win on it, was I? So what I might do is absolutely not equivalent to advice in what you should do. Very, very important to understand those illustrations we use so we can walk in with our eyes wide open. Very, very important. Okay, let's take a look at this, get back in theater mood. Expectations on, warranties or guarantees in respect to these products or services. There is no implied warranty being made with respect to these products, services and products, the teaching that we do. None whatsoever. And this might be frustrating for a person, and that's fine if it is, because it's part of your growth moving into what investorship really is about. There is a mindset of an employee for sure, and a mindset of an entrepreneur investor when it comes to risk tolerance and expectations. One of the questions I think is a fair question that people ask is, hey, Andy, what rate will I really realistically get? This comes from working for money. If a person has a job with a boss riding them every day, they're going to say, look, how much money am I going to make at this job? What is the rate that I can expect? And a rate works like this, $50,000 a year or $25,000 an hour. And he says, look, you do what I say for 40 hours a week, do it 50 weeks a year with 2 weeks vacation, I will pay you this. And I don't know that that's guaranteed because you could get layoff, but it is a realistic expectation that, before you go to work for someone, what am I going to make? And for employees, that makes sense, 100%. I cannot give you that in investing. I really can't. So when someone tries to take this mindset and apply it over here to these two guys who are running the show, the Bulls and the Bears, this isn't like having a boss at all. In fact, these guys aren't even available to be interviewed for the job. So when you move from a boss to the Bulls and the Bears and you ask the Bull or the Bear, what can I realistically get? I will tell you somewhere between infinity and losing everything you have and then some. Now, I say that because I promise the education will be fun, but there's a very serious tone to that as well. I've had investments that went better than my wildest dreams, and I've had nightmares that were worse than my worst nightmare. I've been in both places. And most investors that have been doing this for a while can tell you the old war stories of horror and also the dream come true stuff. A lot of them can. And so there's a certain strength that a person develops in being able to operate in a world with no guarantees. And I'll tell you, as a father, this is so important for me to teach my sons that if you can learn to operate in a world with no guarantees, you'll be a stronger person for it. That's my opinion. And so that ability to say, yeah, I'm going to go into this assuming nothing, just assuming nothing, that is investor. When I go into a business, I'm going to give my best to start a new business, and I've had some succeed and I've had some fail. When I've gone into an investment in the stock market, I've never assumed that it's going to work out. Never. In fact, that's why I have the risk management pillar. If I could assume it was going to work out every time, I wouldn't need my risk management pillar. This is a great book called The Four Agreements. Wonderful author, wonderful counsel. And I love the third of the Four Agreements says, look, just don't make any assumptions. That's the way to go into this. Find the courage to ask the questions, express what you really want. Don't assume. Communicate with others clearly so you can avoid misunderstanding, sadness, and drama. And that's really what this is about for you and I, is for me to communicate as clearly as I possibly can what investing is about, what this journey is going to be like. And I'll tell you, your satisfaction, much more likely to find satisfaction if we just don't make any assumptions at all. Let's just learn it. With this one agreement can transform your life. You may agree or disagree. I tend to agree with that. And so that is an investing mentality. We don't promise results. We will take you through process. And that's an important distinction. Finally, this stuff is risky. And that's the reason I wanted to get educated. It's the reason we have the fourth pillar, risk management. This stuff is risky. And I know of no trade that we begin with that's risk-free. Now, there'll be trades that we can turn risk-free later. But at the initial beginning, there's just no way to lock in a profit without some risk at the get-go. And so all investing, the word all means everything, no exceptions. All investing in trading in the securities markets involves risk. And any decision to place trades in the financial markets, including trading stocks or options, this is a very personal decision. That'd be a great quiz question that should be made after thorough research. That'd be a good quiz question, including a personal risk and financial assessment. And this would be a good quiz question, the engagement of professional assistance that you believe necessary. I'll give you a couple of thoughts on risk, how the world thinks about it, how I think about it, and this will be for your review. Much of risk is investment focused. So if I read in the Wall Street Journal years ago where Buffett makes $2.5 billion from some derivatives, well, is that risky or not risky? Well, we have to ask about the investment. Well, we also consider the investor. I would say it's pretty much accepted, and I wouldn't feel too timid about suggesting a graph that looks something like this, where we say the more reward we seek, by golly, the more risk is going to be there. That's a graph that I think you'll see play out time and time and again. I just don't see high reward investments that don't have any risk, and I don't see people take no risk getting any kind of rewards. So I'm very comfortable with that type of graph. I think any regulator or any experienced investor would say, yeah, that's about what it is. And so let's say someone said these derivatives, they give pretty high rewards, obviously, $2.5 billion here, probably had some significant risk in there, something like that. Well, you can learn about something called a Sharpe ratio. And what a Sharpe ratio is it can kind of tell you how much reward you're getting per how much risk you're taking. A guy might be getting great reward and thinking he's doing really well, but he might find that his risk is far more what he thought it was, and he was just getting lucky. So these Sharpe ratios can be a great tool for understanding risk and reward. And that is what it is. Where we at the Cash Flow Academy hang out, there's not much we can do about this over there. That's just how it is. But let's say we take this risk up here with these derivatives, and then we say, well, is it going to be the same for my mother, who knows nothing about derivatives, that it would be Warren Buffett? I can't prove this, but it's my opinion that this risk graph might look something like that. I don't think we can ever eliminate all the risk initially when we start investment. We certainly batten down the hatches after we're in it and it does well. We can eliminate some risk, but at the get-go, I don't think we ever get it down to zero. I just don't think we do, but I think we can dramatically reduce it based on how much we know about this stuff. So if you say are derivatives risky, on this side you have to say, yeah, they're pretty risky. They give it a pretty good reward, but there's pretty good risk there. But when you also figure in who's doing it, I think that for Buffett to do this, they're pretty low risk for whether Buffett does it. When I do this, I feel that I feel a lot less risk than maybe someone who hasn't done it before. If I want to write some options, I feel like I have an accurate understanding of those risks, where my mother, I would never want her to do that. Now, isn't that interesting? If someone says, Andy, I want to invest in what you invest in. Well, I wouldn't put my own mother in the investments I'm in, not in a million years, because I don't think she has the temperament, and I don't think she has the education to do this. Sometimes I don't even have the right temperament all the time. And so please understand that the purpose of the Cash Flow Academy is an attempt to help you understand these risks better, ways to manage them, so you have better clarity. There are so many people trading stops, and thousands of them I've met, that, for example, people trading options that don't know what a delta or a theta is. They don't even know what that is. And to me, I think that increases the risk even higher without increasing the reward with no education. So we can't do much about this graph over here, but we do feel that the quality of the investor often determines the outcome as much as the investment. It's a great question with the be, do, have idea. Is, when we say, be, do, have, everybody wants to have this money and everyone wants to have this freedom right here. And so they say, hey, I want to do exactly what you do. Well, they haven't become what Buffett has become. And so Buffett is an investor. I mean, he has become this. That means he can do stuff that maybe other people can't do as effectively. So I will tell you that when I changed from trying to find the right investments to becoming a better investor, I think that was a step in the right direction and something to think about. Also with risk is, I mentioned this earlier, I'm going to mention it again, is everything we do at the Cashflow Academy, 100% of everything we do is simply in simulated trading accounts, okay? So the education needs to be very, very real, but the money doesn't need to be real. And so here's a list of stocks as it stands as of this recording. And we see winners and losers. This is a little high right now because we got lucky on that one. That's half of it's right there. So this is a little higher than it normally is. But it's not uncommon to see losses and wins both. And none of this represents any real money, but it does represent real companies and real metrics and real performance in terms of the paper trade accounts. This is called simulated trading, or what they call paper money down here. And I move forward with your honest, honor system, saying, look, we're always going to do this in a paper trade account. Everything you do as you practice with us is done with these paper trade account. They're easy to set up. It's really getting exciting to trade because often now trading is commission free often with a lot of people. So it's very tempting to turn it on to real. But I will say, as far as we're concerned academically, we're going to stay in the simulator 100% of the time. And so, this is not a real gain. That's not real money, but these are real stocks. And we just feel that learning in a risk-free environment is a wonderful place to learn. And any decision to go out and do with this education what you're going to do is your responsibility, as we've said in our disclaimer. Last thing I'll say is, in that disclaimer, this would be a good quiz question, is that it is okay to seek advice from professionals. And I will tell you, it's not only okay to do, you might consider it. In my life, I could make a bigger team than this, but I don't have room for it. But in my life, I have teachers. And some of the best money I've ever spent has been on people to teach me more about how these things work. Even a lesson like Be, Do, Have was worth the money I paid in that seminar to go learn that. I have another great thing about having a great team is you meet wonderful people that become good friends and they influence your life. You feel a lot of gratitude. I have two just amazing attorneys who care about my family. They care about keeping my assets protected. They care about the agreements I make to help me keep my agreements, to help I understand all that legal stuff. And it's the best money you ever spend is on this type of stuff. My attorney and accountant, particularly my asset protection attorney, they're on the phone. Okay, they're on the phone helping make decisions that I need help making. And so this is a wonderful team. And I don't use a financial planner. I feel very confident making my own, but I would never tell anyone else not to. Advisors and planners. What's interesting, I believe, is that the more I understand this, the better conversation I can have with my attorneys. The more I understand this, the better I can communicate with any of these people. And so none of them have ever been upset if I knew a little bit about it. They've never been intimidated. In fact, it helps me ask better questions. And so I'll be here to support your questions, but so we go forward understanding this, is there certain questions that I reserve the right not to answer, and certain questions I'm just delighted to answer. So if it is an advice question, someone emails me, say, I'm thinking about buying XYZ stock. Do you think it's a good choice for me? I'll say, that's legal advice. I won't answer that. And I'll just be that frank with it. That's something to if you want advice, then add an advisor, over here and get advice from them. But if you say, hey, Andy, I'm looking at this. I'm not sure what the at-the-money price is. We went over this in the options. Which one is the at-the-money strike? I have no problem answering stuff like that because now you're learning something. If it's a legal question, I'll say this is a great one for your legal and accounting team. Should I trade as an LLC or as an individual? Well, talk to your attorney, talk to your accountant. They'll get together and help you make that choice. Or, hey, am I on track for where I want to be? Well, a planner can help you map that out and see where you are. So I will answer all of your education questions, and we do it gladly and excited to do it. Email us, ask us, ask us, ask us. You're enrolled in our academy. We're here to help you. However, if it's a legal or accounting or financial planning or just an advice question, we're going to send you the people that serve that role on your team. So that is our disclaimer. And you'll see that over and over again. And I know that people say, oh, we get it. There's risk. We're grown-ups. We get to the good stuff. Well, spending a half hour or so on something like that, I think is worth our while. So we understand our relationships, our expectations are right. And so we can get off on the right foot and have a great time. So again, congratulations for enrolling in the Cashflow Academy at whatever level you've enrolled at. Some people are going to progressively go till they've taken all of our courses, which is fantastic. We'll hop into the 4 pillars of investing. This is something you'll absolutely be wanting to study because it'll apply to every course we teach, and it's just going to be awesome. So with that, again, I welcome you to our investing education family, and I congratulate you for doing something towards your goals and learning something. I think you're going to be more than impressed with this education. If you're anything like most of our students, you've found a great education home. So with that, we'll close out this video. Immediately, you should take the quiz that's associated with this video and take it until you get 100%. And it's an easy quiz. It just talks about the things we've covered in this video. And once you've completed that quiz, and I know you understand this to the degree that we can communicate it, by golly, we'll turn on your classes and you're ready to hop in and learn as fast as you want to learn and enjoy. Take care.